In this session, we will be discussing System Pay Modifiers for Sage Intacct Construction Payroll. A System Pay Modifier is basically anything that affects a payroll employee during processing that isn't already accounted for through things like hourly time entry, auto salary pay, or taxes. So this would include things like any employee deduction, employer benefits like healthcare paid by the employer, 401k Roth, including matches, other pays like bonuses, mileage, or expense reimbursements, and then things like cash fringes and child support and garnishments and all that stuff related to payroll. So let's dive in and take a look and show you some examples of each. So we're going to first go into System Pay Modifiers by going into the Payroll module and going into Setup System Pay Modifiers. Again, this is one of the areas that it doesn't really matter if you're at top level or entity level. So we're just going to go into System Pay Modifiers. Now, in your instance, most likely the system will already come with some pre-built, and they may look different than this one, but some pre-built pay modifiers that you can use, or that you can use as a basis to start other pay modifiers that you need. Eventually, when you get through setting up your pay modifiers and you're not going to use these samples, and you don't think you need them to help you create others, you can go ahead and delete these as needed. One thing to consider when you're creating these pay modifiers, when you're setting up the pay modifiers, the ID itself, for example, dental employee here, is going to be the description that also shows up on the pay stub. So you want to make these IDs, so that you can actually make them understandable for the employees as they're seeing them on their pay stubs, but not too complex where it's just going to, be too many characters and junk up all your lists and things like that. So just keep that in mind. So what the main goal, especially initially up front with System Pay Modifiers is we need to get all the different types or items that you may use for an employee built in a list here. We don't necessarily need the exact amounts that are going to be deducted or percentages, or even in some cases, every scenario of a calculation that is needed. What's really important up front is that you set up the pay modifiers with the correct type, and we'll go into what that means: pay modifier type, amount versus hours, and pay category. So once you set up and establish the pay category for a modifier and the pay modifier type, you can't edit those. So if I go into a dental employee right here, you'll notice that these are grayed out. So you want to get those correct up front. How we calculate it, what the amount is it exempt from taxes, all that stuff can be changed as we go. So you really want to establish the correct pay category and pay type from there. And we'll talk in more detail about what your options are within those. And the other thing to think about is do I pre-fill in amounts or percentages, or do I leave them blank? So these are defaults that you're able to use for all employees. So for example, if your dental plan for employee is $12 per paycheck for all employees, then it makes sense to fill it out here. And then when you assign this pay modifier to the employee record, it'll pre-fill in the 12 automatically, so you don't have to key it in for every employee. But you always will have the option, and you'll see this in later videos, for this one particular employee to make it different. Say, no, it's not going to be 12 for this employee, it's going to be 10. Okay. Or some of these are so unique to the employee, like a 401k, for example. You're not going to fill out the 401k what the percent is. Actually, there's not even a field for that here in this scenario, because that's going to be determined on an employee by employee basis. So you can leave the amounts blank or leave them 0. So for example, if you don't want to fill out your amounts in the dental plan, when you're setting this up, you would just take out that max per period here and just leave it blank. And then when we set up the employees, we're going to have the ability to add the individual amounts in at this time. So before we talk about what different types of pay categories you can have for a pay modifier, basically we need to determine and think about what pay modifier type it's going to be. And let's keep 401k off to the side for now. We'll talk about that specifically on its own after this. But basically, when you set up a pay modifier that is anything besides 401k Roth, you're going to have two choices. Is it amount-based or is it hour-based? So what you can't do in the system is and let's use a union dues. It's usually a good example. If you're union, you might have a union dues deduction and you have multiple locals. In some cases, the calculation for a union due is based on hours. It might be a rate per regular hour worked, a rate per overtime hour worked. So in that scenario, like you see here, we would make the union dues an hour-based modifier. And when you go into an hour-based modifier, you have the ability to list each of the hour types and determine what the rate is. What you'll notice I can't do is there's no fields. Once I say hour-based, there's no fields for flat amounts, and there's no fields for percentages if it was a percent of gross pay. Okay? If you need sometimes your union dues to be amount-based, which would be a flat amount or a percent of gross pay, for example, you actually need to set up two identifiers. You would need a union dues hourly, which is based here, and then you might need another one called union dues percent, let's say, and that would be an amount-based type. We'll say as of August 1st, amount-based, and then the fields will change. And now the basis detail says, well, is it a flat amount or is it a percent? And you can say, yep, it's usually 3% of gross pay. Okay? So that's the big difference. You don't necessarily need separate deductions or union dues for each local because usually we can determine the rate and the amount and the calculation in the union tables later in the setup that we'll get into. But if you have, sometimes it's hour-based and sometimes it's amount-based, you do need to have two separate versions for that. So that's the biggest thing to consider when creating a pay modifier is, do I need maybe an amount-based version and an hour-based version of the same pay modifier? Next big thing to decide on is what is going to be the pay category for this pay modifier. So a lot of the legacy systems that we deal with or that you will be coming from, you'll have separate areas in the payroll systems to set these up. For example, in the Sage 300 CRE product, you have an ability to set up deductions, set up fringes, set up pays. There's all different menu items and they break them out. Well, for Intacct, they put them all in the same place, and that is a system pay modifier. Then when you create the modifier, you tell it which category, which really is equivalent to what I just mentioned before, deductions, fringes, and what we're going to do now is go through which each one of those are. So if I come into here and I just set up a new one, I'll call create new. You'll give it an ID. We'll just call it test pay mod. And you'll pick an effective date. Now, when you're setting up your system, initially, I would recommend doing the first of the year for whatever you're setting up. In case you want to do testing later on, you may want to test in a prior date. So don't just use today's date for your effective date. Use some date in the past so that it allows you to be able to, if you're testing for some older dates, you won't get it. You won't get error messages because there's no effective date for it. So just use a 1-1. And then you'll notice the system's going to ask you for the pay category and the type. So if we look at this little help, this little information icon here, it's very useful. And it will discuss which each one of these categories means. 401k, that's a specific 401k calculation. We're going to talk about that shortly. Deduction is what I would consider the most obvious one. It is an employee deduction. It's coming out of the employee pay. It is not a company expense. You're not going to have an expense account for that. You're just going to have a payable account in most cases, and it's going to come out of the employee's net pay. So it'll reduce their net pay. couple of the trickier ones are the other compensation and the reimbursement pay categories. We're going to discuss those individually next, but basically in other compensation, I'll just read it for you here. It's money that is paid on behalf of the employee. The most common use for this would be the employer benefits, the fringe payments, the health insurance that is paid by the employer, anything like that. It's not going to be, cash is not giving to the employee in the paycheck. It's paid on behalf of the employee. Okay. Reimbursement is money that we're giving directly to the employee. So reimbursement is a little tricky, especially coming from other legacy systems. Reimbursement just does not mean expense reimbursement, okay? It means any other pay that I'm giving to the employee that isn't hour-based. So if you remember in the earlier videos, we talked about for hour types, you're only going to list pays that are hour-based, regular overtime. You're not going to set up bonus there because bonus is not hour-based. Bonus is typically a flat amount. So bonus would be categorized as a reimbursement system pay modifier because it's an other pay. It's money that we're giving in to the employee. Whether it's taxable or not, we'll decide that later. But it's money that's given to the employee. So that would be an expense reimbursement, a bonus, mileage, commission pay, travel pay, all those types of things that aren't traditionally based on hours is going to be set up as a reimbursement. Okay. Another big example for a reimbursement would be a cash fringe for a certified project where you're actually giving a cash fringe. Some people give the cash fringe in pay, and that would be a reimbursement. Other companies pay out the cash fringe in retirement benefits, things like that, and they put it right into the retirement plans. So that cash fringe would then be set up as an other compensation because it's being paid on behalf of the employee, not given to them in the paycheck. And we'll talk more detail in some examples as we go along. So we do have some samples in here already. So let's go ahead and use some samples just to go through some of these. So you can sort by the pay categories here. And you can see here in my system, there is deductions that are already set up. And, most common one might be a healthcare or medical insurance plan, for example, as a deduction. So something that the employee's paying. And you can see here, they labeled there as just the employee option, employee family. This might be employee single. I'm not exactly sure. I would recommend spelling it out a little bit more. What some people do elect to do here, especially for their healthcare plans, is even be more granular. And maybe there's 6 different options that an employee can pick. Set up those pay modifiers and list all 6 options because in here, you could fill out the amount per paycheck. And then when you assign them to the employee files, it's going to deduct that amount automatically. But if they ever choose to change plans, you could just swap out the plan and it will now show them the new deduction. So some people will build those out. But let's just go into medical EE and you'll see here we selected it as a deduction. It's amount based. Now, some of the deductions are pre-tax. So basically, you're allowed to deduct the deduction before you're charged tax. So anything that you list here under taxable deductions, except for the following, will exclude it. So basically, this is saying, hey, it's pre-tax for FICA, Medicare, federal income tax, and then these state unemployments. So one of the things you're going to need to add here is if you're using a default, something out of the box, sometimes it'll come with these already set up for you like this one did, but you may be Missouri. And so it doesn't know that. So you'll need to come into here and make sure not only you're federal, but that, what other states are you using? If you're in 2 states, you're going to need to list them all. So for example, let's say we're Missouri. We want to make sure we add Missouri SIT. Is it exempt from Missouri SUTA? I'm not sure, but we'll just pretend it is. And then maybe I also work in Illinois. So we would have to come in and, go to Illinois here and add those ones. So you do need to make sure that all of those pre-taxes are set up in here. Okay. And then down after that is something called basis details. Use your question mark, your information as possible. You'll also see a link for that here in some samples, how to set up some pay modifiers below. If you click on learn more here, it is going to take you into the article in the help for system pay modifier examples. I usually recommend favorite this page. It's a nice little, article that will show you different types of pay mods that you may need to set up that, maybe you didn't need to set up day one, but now halfway, 6 months in, there's a new one you just added. Well, you can scroll down here and see all the different types, and they have some good examples for you to take a look at. So definitely keep that in mind. But the basis detail is, I call it the core, the entry level, hopefully the only section that you'll ever need to go into for pay modifiers. So basically in this section, it will change slightly based on if you say amount-based or hour-based. In this case, it's amount-based, so it's going to let me either do a flat amount or a percent of the basis, which is a percent of gross pay. Now again, if this is a modifier that is going to be changing for every employee, you don't have to fill amounts in here. What you do need, though, is you always need this contribution type. It's called time card / salary earnings. I usually compare it means gross pay. It means any of your hourly based pay and salary or auto salary as well. Okay. One thing to consider here is if this is a calculation, now this is a flat amount, so we don't have to worry about other pays, but if this is a percent of gross pay, for example, we also want to consider, well, what about the other pays? Do we want it to deduct off the gross pay of bonus, for example? Anything that's not an hourly or auto salary is going to be what I call an other pay or a reimbursement. And if this is eligible to be calculated off of it, it needs to be added here. So if this was, let's say, 2% of gross pay, then I would want to make sure I also, on top of this time card and salary, I click that plus button and I say it's also based on the pay modifier called bonus, commission, travel pay, whatever other pays you have listed, you would list that here like that. This will come up in the 401k section, so we'll see it again. I'm just going to say minus here. So most of the system pay modifiers that you set up, you'll probably only need to go through the basis details. I do have some samples set up in the system that need to go further down. So we'll talk about those next. So I'm going to skip the available funds detail section and the adjusted by section. I do want to mention the compliance reporting, or it's sometimes just called reporting. This is how it communicates to Atrix for your tax reporting and your W-2s and things like that. A lot of times this comes pre-filled already for you, especially with the taxes, the 401k, but there may be some unique setups that you need to put on a W-2 somewhere. We don't need this day one when we're setting up. We need it before we go live, right? So we're going to want to come back into here. But basically, what you'll need to make sure is, hey, do I need to report this, for example, on a W-2? And you would check it there. And then there's this code that you got to find. And this code tells it where to show on the W-2. So if you hit this little info button here, it'll give you an example. And then there's this learn more. And if you click on that, it will show you the complete Atrix table. And you see this column B here? This is the 4-digit code that you need. So if I was looking for W-2, you could filter on this too. I'm just going to page down there's local taxes in here, but there's a code for everything you need. And we can assist in this as well. Hey, I'm not sure where this goes. But if you notice, if I get down here, I might have passed it here. Let's see. I think I did. Yeah, I did. Sorry. You should see a category of W-2. There it is. Okay. So it'll show you here, here's all the W-2 codes. And then basically there's the, you can kind of read which code is it for. and then you grab the code. So again, we'll help you do that for the ones that need filling out. Majority, you should see that here, but I just wanted to show you where that is. And then you would save it. Okay, and that's going to get it built on the list so that we can use it for the next steps, which is going to be assigning it general ledger numbers. So we need to get our pay modifiers set up, at least the IDs set up before we can go to the next step, which is build out our general ledger. So it's important to build that list out. We can still work on the calculation if we're not sure. If you're not sure about the calculation, then hold off on that. You can do it in a live class for payroll. We'll discuss it together, or a Q&A as well. The only other thing, and this is really universal based on if it's deduct or fringe or whatnot, is what you can do then, especially with like your healthcare plans. All right, next year they're going up. So if you know the new rates, you can do this ahead of time. You don't have to wait for your last payroll. You can come in and say, well, we got our new rates for 2025. So I'm going to hit duplicate here. And for dental EE, I'm going to go ahead and say, as of January 2025, the rate the employee has to pay for dental is going up to $16. Save. So by doing that right there, for any employee that is assigned the dental EE, as of January 1, their paycheck is automatically going to go up to 16. I don't have to set that up in each employee's file separately unless I uniquely filled in the amounts there. But in this case, we would have the amount here. We just update it here, and then it'll just take effect as of 1/1/2025. And that's true for fringes, other comp, everything. So dental employer, that's true for as well. Very handy. All right, let's talk 401k next. The 401k pay modifier type does more than just 401k. It's actually for 401k and Roth as well. So it's pre-tax and post-tax. Some people even elect to rename this to make it make a little bit more sense. So for example, let's come into here and let's duplicate that. And let's say as of 1/1, we're going to call this 401k and Roth because we have both. Okay. So we can call it the 401k and Roth, and it's still going to be a pay category of 401k. Notice there's no amount type or anything like that. We can put in benefit type 401k. And the first time you get your system, you should have deferral limits all filled in for you, but do make sure these limits are maintained. Because these will change per the years. And this, I believe, is up to date. But we have the deferral limit, primary catch-up, and now we have a new field in the system called the secondary catch-up, which is going to be used for the new super catch-up contributions, that are used for ages, multiple sources for ages, different age brackets. So we have the secondary catch-up limit now in here. Okay, so this should all pre-fill in, but what's nice about this is because the 401k and the Roth and also the matching are all under one pay modifier, it tracks combined limits really well. So you'll have that. The tax details, this will be one area, like I mentioned before, that you will need to fill out your additional pre-tax items. Again, this is just for the 401k portion, not the Roth. The Roth is after tax, but you can see here, it's only added the federal in. So I need to make sure that I go and enter my states that are also pre-tax. So like Missouri would be pre-tax. You can elect to enter all the states that you have loaded up, and you need to if that's the case. But go ahead and fill them out there. So I mentioned earlier about the additional basis. So it's going to default to the time card and salary earnings. And then this is definitely one place that I would want to add the bonus pay in at least. Pay modifier. It's also going to be off of the bonus. And you may have others. You may have like a commission pay or a travel pay. You can add multiple here if you have any. I don't think I do. And then the next thing is if you are doing a matching rate for the 401k, you can fill it out here. You can have different levels, tiered levels. We haven't really been stumped yet, but basically this one's saying we're going to match 100% of what the employee deducts up to 4% in total. Then anything after that, we're going to take 50% of that, but only up to a total of 6%. And so you can establish these levels, and we will talk these out and test these together in the live class, in the testing sessions. So fill it out to the best of your ability. And then, like I said, we can always tweak it after we get into the testing stage here. And then you'll notice for the compliance reporting for the Atrix, those should already be pre-filled out, and it has special codes for the pre-tax contribution, the pre-tax match, and so forth, and the after-tax for the Roth. So all of that can be set up under one ID. When we get into the employee setup in the next videos, you'll see where you can establish for this employee whether they're doing the pre-tax, the 401k, the Roth, the after-tax, or both. And then you'll also see some new fields for the catch-up contribution elections for the different ages from 50 to 59 and 60 to 63. We're going to be able to do that all in the employee setup. But basically, you're going to get this established ahead of time, and then you'll be good to go when we get into the employees. Okay, so that is the 401k. Other compensation would follow the same rules that we pretty much use to set up for deductions. The only difference is the other compensation is going to be something that is paid by the company, the employer. Okay, so you'll see things like medical. Maybe the company pays for some portion of the medical plan, the dental plan. Unions, you're going to have, union IDs here for health and welfare, for pension, any of your different union IDs that you need that are fringe benefits. So basically, other compensation means fringes and so forth. So you'll have that in there. So when I go into this, it's really the same. It's just medical ER, for example. The company's going to pay $115 per pay period for anybody who's elected to get this. It's other comp, and it's an amount based. So all this setup is really the same that we saw in deductions. It's just, is it paid by the employer versus the employee? There are a few other things that you can use for other compensation. One would be like a third-party sick pay or company use a vehicle for an owner, things that you have to get on their wages as taxable wages, but that they haven't paid for. It's not actually a regular thing. So you can set them up in here. And then basically when you set up the other compensation, so if we do like, I'm just going to do one here, auto use for owner. That's one here. We'll just do today's date. And this is going to be other comp, and it's going to be an amount based. But what happens is as soon as you fill in taxes, ignore the description here. As soon as you fill out taxes for this other compensation, that tells the system this is part of their taxable wages. So if I filled out FIT, if I added that and Missouri, SIT and FICA and all that good stuff, now this thing would recognize this is part of taxable wages, and it can then show up on your Atrix W-2. Okay, and it might just be a flat amount, but even if it's a flat amount, I do want to add that, at least add that time card salary earnings to it. And you don't know the amount because the amount is going to be entered in manually during a check or during what's called a payroll adjustment. Okay, so you can do that too. All right, let's move on to reimbursements. I'm going to sort by pay category. And I did mention reimbursements can be a lot of different things. For example, bonus. This is where you're traditionally going to set up your bonus. Reimbursement means I'm giving it to them in their pay. And with a reimbursement, whether it's part of taxable wages or not is based on if there's taxes filled in here. So for a reimbursement, if I'm filling taxes out here, I'm telling the system, this is a taxable other pay, take taxes out for bonus. So if I list taxes here, it's going to report on their W-2 and it's going to take taxes out for them. Okay. And it's a flat amount. So again, it varies. We're not going to fill an amount in here and we're just going to leave it blank with the time card salary earnings. Now, you may have things like expense reimbursements, mileage, per diem, things that are paid to the employee but shouldn't be part of their gross pay. So you see we have some, oh, there was a vehicle use set up. See, I missed that. Sorry about that. I have a per diem, some, maybe one, usually you just call one expense reimbursement or reimbursements. Let's take a look at the per diem, for example. The per diem is set up as a reimbursement, means they're going to get it in their pay. You're going to give them $50, whatever we're going to give them. And because no taxes are listed here, the system knows this is not part of taxable wages. It's just something we're giving to them. We're reimbursing them back. It'll go in their paycheck and increase their net pay, but it's not going to be part of their gross wages. That's the difference in the different types of reimbursements, all whether you list taxes or not. Okay. So you'll see, I think for supplies reimbursement, same thing. Okay. You can do that as well. So before we get into a couple of unique examples, I want to talk about unions. One thing to consider, and again, we'll talk about this specifically in your live payroll classes and also in Q&As, your union needs. We want to try our best practices, definitely for your union pay modifiers. Try and simplify these as much as possible. You may have 20 locals, for example. You don't need to list union dues as a separate modifier for each local. We can use the same ID because in the table, we're going to determine different rates, different calculation methods. Like I said, the only thing to consider out of the box for unions is hey, and for dues, sometimes if it's based on hours and sometimes it's based on amount or percent, then you do need two union dues hour, union due percent. It could be for any of these, but try and keep these simple. We can always expand on them if needed, but chances are in a lot of your legacy systems, you've just set up new IDs and put just kind of built your list up big instead of keeping it lean and mean. So this is your chance to kind of simplify that a little bit. And we can discuss that more one-on-one and live in the sessions when we get into them. The other thing that would, not be union-based, but would be certified or Davis-Bacon would be your cash fringe setup. So I do want to show you that briefly. And they have one set up in here called PW Cash Fringe. You can call it Cash Fringe. You can call it CF, whatever you want to call it. But it will be set up as a reimbursement. And it's going to be an hour-based. Okay. And, again, it is just like a bonus pay, whatever. It's going to be eligible to have taxes taken out on it because we're giving this back in their pay. So there is a scenario where some people do the retirement plan. That would be set up as a other compensation pay category, and then we wouldn't have taxes in that. But in this case, we're giving it to them in their paycheck. We're going to deduct taxes. Now, you do need, because this is hour-based, you do need to list what types of hours are eligible for cash fringe. So, for example, you're typically not paying a cash fringe on sick hours or holiday hours. It's usually like regular overtime and double time. So you need to list them here. But what usually happens is the rate package, the Davis-Bacon, the certified table is going to determine what the cash fringe rate is. So in most of the time, you wouldn't fill this out here. You would fill out a 0 here because we're going to set this up later, when we get into our compensation tables. We don't know what the rates are yet. We just need to build out the cash fringe so we can use it later. Usually be like this. Now, we are going to go beyond for the first time this basis definition, this rate definition. Because with the cash fringe, in some cases, you are allowed to deduct things like employer benefits. So what you can do down here in this reduction basis is you can say, all right, take the cash fringe rate, look at what they got paid, because in some cases, the certified rate might be lower than what you're paying the employee. So it'll also look at what the employee actually got paid. And it will also look at things that you select here. So in this case, we're saying they're allowed to deduct the medical and the dental, and there's actually the 401k match portion, or any other ones that you have here. You can list whichever ones you're allowed to reduce. It doesn't matter if these pay modifiers are hour-based or amount-based. If they are amount-based, it will calculate it out to a per hour benefit. And then it'll say, all right, well, your total rate, which is your cash fringe of 20 and your certified rate of 30, let's say is $50. You got paid a rate of $30 for your regular pay. And these three benefits equal out to $10 an hour worth of benefits. So the cash fringe that would get paid to this employee would be 10, not 20, because it's going to reduce the 10 out. All of that can be set up and tested inside Intacct. It works really well. And again, usually we talk through this and do this one-on-one and test it out as we go. So you can do this cash fringe setup for either a reimbursement or giving it to them in cash, or a retirement type plan. It's all based on the pay category, changing it from other comp to reimbursement. So I just wanted to bring that one up. Hopefully that'll give you a good basis for your pay modifiers. The idea here is set up as much as you can on your own, and then for some of the unique ones you have, reach out to us in a Q&A during our live sessions, and we'll help you build out these calculations. Ultimately, when you get to the testing stage, we're going to test these out and make sure they work. Before I let you go, I'll show you one more example. A common one is garnishments. So garnishments, you'll see here, there's garn 1, garn 2. So in the garnishment, very similar to what we just said for cash fringe, but now there's this section of available funds. So this garnishment is set up to calculate 50% of available funds. Well, what's available funds? Or excess earnings, disposable net pay, they call it. Available funds are going to be your gross wages minus these taxes. Okay? And that's going to be up to 50% of your available funds. Sometimes it's after 250. You can have different rules here, so we'll help you with that. Now, let's say this employee has 2 garnishments. So we set up garn 1, but garn 2 says, maybe it's a child support, says, all right, well, they set it up the same way, 50%. It could be just a flat amount as well. But you'll see here, they're saying, all right, it's after the taxes, but it's adjusted down. You have to pay garn 1 first. So you can list that. So this one will make sure you have enough money to pay garn 1 before it takes garn 2. Some of the cool things that we can do in the payroll setup. But again, it's going to be unique to each company. So hopefully this gives you enough to get these set up. And if you have any questions on any of this, as always, join Q&A, sign up for a live class, and we'll get you going. Thank you.